Good morning and welcome to another interesting edition of the Market Review, where we bring you key developments in the financial and capital market as it affects the economy. Today, we'll be taking a very interesting conversation as we look at the implications of the Finance Bill 2021 on the Nigerian capital market. With me to have this conversation is Professor Uche Uwaleke. He's the president of the Association of Capital Market Academics in Nigeria. Nice to have you, Professor Uche Uwaleke, and compliments of the season.
Yeah, very good morning to you, Abasi, and compliments of the season. I'm indeed delighted to be your guest this morning.
The year is winding down, and of course, it has been a very eventful year. But first, let's look at this Finance Bill 2021, Prof. And I think the first part of it, when we looked at the changes, it says that the capital gains tax at the rate of 50% or 5% will be applicable on disposal of shares in a Nigerian company worth 500 million naira or more in any 12 consecutive months, except where the proceed is reinvested in the shares. A partial reinvestment will attract tax proportionately. Transfer of shares under the regulated security lending transaction is exempted. This is just one aspect of the changes we're going to see in the Finance Bill 2021. But overall, Prof, how will this, what are the implications for the capital market with just what we've already highlighted now?
Yes, Abasi, let me start by saying that this idea of accompanying the annual budgets with Finance Bill is indeed a good one because ideally, the Finance Bill, alongside the medium-term expenditure framework, should form the basis for annual budgets. And we have seen this Finance Bill for 2 years running. We had that of 2019, 2020, and now 2021. Overall, I would say that for me, the major advantage it has is that it seeks to promote fiscal equity, as well as attempt to align our tax laws with global best practice. And of course, doing so would mean also having some incentives for companies and businesses. So I think the Finance Bill 2021, shortly it will become an act because we understand that the National Assembly is planning to pass it alongside the 2020-22 appropriation bill, and we expect the president to sign that as soon as that's done. So the Finance Bill has both direct and indirect impact on the capital market. Some of them are direct, like the one you mentioned. I expect that to have a direct impact. There are also a couple of other amendments which have indirect impact. Of course, the amendments is in respect of 12 laws and some others. Now, this is a continuation of what we saw in 2020. We also had some of these amendments that touched on the capital markets. There was also the issue of unclaimed fund trust fund, again that emanated from the 2020 bill, which required all unclaimed dividends after 6 years to be temporarily borrowed by the federal government. So all this we saw from 2020. And in 2021, the very first one that hits directly on the market has to do with the one you mentioned, introducing 5% capital gains tax on disposal, on gains from disposal of shares in any Nigerian company, for any 12 consecutive months that add up to 500 million naira. Of course, that is going to impact the markets, and I also think that impact will be positive. How? Because it provides an incentive. It says the CGT will not apply, 5% CGT will not apply if those proceeds are reinvested, okay, in shares of any Nigerian company. So that's also an incentive to encourage reinvestment of such proceeds so that they are not taken out of the market. And then it goes on to say that if it has to do with government securities, if it has to do with government shares and bonds, of course that's exempted. If it also has to do with securities lending, of course, securities lending, especially in which securities are lent, permits that's what stocks and shares, bonds that don't belong to one. Okay, when you lend such securities, the person using them, of course, is not his or her own. So in the past, the tax is charged on the person lending, but that has been removed now to now reflect the substance. Who is benefiting from such securities? It is the borrower that is benefiting. So the tax now is on the person benefiting from the borrower and not on the lender. So that way it will encourage securities, lending. So securities lending too is exempted from this CGT arrangement. Of course, CGT generally is 10%, and that's capital gains tax is 10%. But this one is saying, CGT was also abolished with respect to shares and bonds or securities, some time ago. So now government is reintroducing it, but saying that it is only introducing 5% if you dispose shares, okay, and you make gain, and that gain is up to 500,000 in any 12 calendar, in any 12 months consecutively, that you'll be charged 5%. But that charge will not apply if those proceeds are reinvested. And of course, if it also made exemption. So I think it's going to have a positive impact on the market because it's providing incentives for those, taking those, making those gains, to not to take them out of the market, but also to reinvest them, in the market. Something that I consider positive. Another direct, another amendment that is likely to impact the market directly has to do the issue with respect to withholding tax. Now, withholding tax on interest, withholding tax on interest from unit trust, is now going to be considered as the final tax. Of course, you know that before now, what is considered as the final tax is withholding tax on dividend. But now the amendment has also included withholding tax on interest from unit trust to be considered as final tax, meaning it will no longer be subject to double tax. So that's another good development amendment that I think will impact the market directly. Then there is also this issue of the Federal Inland Revenue Service being empowered to now be the sole agency. Abasi, can you still hear me?
I can hear you very well, Prof.
Yes, the Federal Inland Revenue Service has been empowered in the finance bill to be the sole agency for the administration, for the assessment, collection, accounting, and enforcement of all taxes and levies, due to the Federation. Again, what that means is that for companies that companies that are in the market or quoted on the exchange, okay, they may not really suffer from this multiple taxes or different agencies coming to collect what form of levy or taxes from them. So now they now know that they're dealing with the Federal Inland Revenue Service. So I think it helps planning, for these companies. So I think it's another good one. Another thing that will also affect this market or impact the market is the latitude. The bill has also given to government now, both federal and state governments, to borrow, domestically, to issue bonds. The amendment is saying now that governments now can borrow for to implement critical reforms of significant national impact. That's the amendment that is going to be effected in the Fiscal Responsibilities Act. Under the Fiscal Responsibility Act, governments are allowed to borrow for capital and human capital development, but now there is now an addition that government can also borrow to implement critical reforms.
That's a very, very good positive story in terms of the fact that the 5% capital gains tax reinvestment in share activities will help boost market activities, and looking forward to when it's signed into law and how it's going to impact the market. Well, let me take you to something I know that beginning of this year, when you had the opportunity to speak at the Capital Market Correspondence of Nigeria, that was last year, you talked about the fact that amidst the concerns of COVID, it was going to really drive the market, and it's really had its impact. Digitization across all the market ecosystems. When you look now at in December in 2021 at the impact of digitization, what are those things that you say are quite remarkable and needs to be improved upon? Because we've had a digital sub-broker license issued to Chaka, and we want to see more of that happen. We want to see millennials engaged in the market and boost our retail investor base, which is just between 3 to 4 million at the moment.
You see, that cannot be overemphasized, because if you don't digitize, if you don't provide products that appeal to the millennials and the Gen Zs, okay, they take to these other private, private, if you like, private digital, asset classes like cryptocurrency. Why is cryptocurrency popular today? Is because the youth, find cryptocurrency, quite attractive. So there's need to digitize or leverage on technology with respect to our market. Of course, a lot has been done throughout the period of COVID. Even as we speak, trading floors are not open. Trading, has been online, and I'm also aware that the exchange has done a lot in terms of, modernizing the platforms. But there is this other aspect that still needs to be done, and that has to do with further fast tracking the cycle, the trading cycle. The T+3 for equities is still long. That's talking about 4 days. Transaction day plus another 3 days. That transaction cycle is still long. In some other climes, you have T+2, T+1, or even T. That is same day. So the market should get to a point where it can start and conclude its transactions same day. So same day. And that's what digitalization will bring about. And that's when you begin to make it attractive to the youth. As you know, you were at that conference, Abasi, the NGS conference that's held in Abuja. One of the things that was said there, is that the average age of retail investors in our market today is 53 years. Yeah, so that's the average age. So how do we get the youth to come to the market? It is through this digitalization. There is need to further shorten the transaction cycle, using technology. There is also the need to enable digital platforms for the trading in securities. We should get to a point where retail investors can, also sitting in their office or in their homes, buy or sell securities. It's already happening in Kenya, where the exchange and the mobile telecom companies, including the Central Bank of Kenya, they're in partnerships, to bring about all this. Right now, as we speak, the FGN Sukuk bond is on sale. is on sale. So we should get to a point where I can use my phone, to subscribe to that, to that FGN bond. Okay, at least in the primary market, that should be possible. We should get to that point. As I said, it's already happening in Kenya. So when we get to the point where these things are possible, especially now that we have the central bank is also coming up with some digital products like the e-Naira, okay, that should rub off positively on our capital market. That should bring more retail investors to the market, especially the youths that are more in number. From the point of regulation, reg tech, regulatory technology, and what we also call SupTech, supervisory technology, all this must come to play. The Securities and Exchange Commission, the Nigerian, the NGX regulation limited, okay, these two should be able to leverage technology, to enhance their regulation. With technology, you stay ahead of the market. You are proactive, rather than being reactive.
Prof, before I let you go, we'd just like to take a crystal ball into 2022. I'm not saying that you're a gazer, but
yes,
as a scholar,
I'm working on another paper.
I trust your outlook will come out very soon.
Yes,
but what do you see as the?
I called it.
Yes. What do you see as 2, 3?
I did an article on crystal balling.
Yes.
In Nigerian capital market in 2021, and I'm also doing for 2022.
We look forward to that. But taking a peep into it, yes. As a scholar, what are the top 2, 3 trends we should watch out for?
A number of things will shape performance. A number of factors will shape performance of the markets in 2022. No doubt, as you know, the market is not does not exist in a vacuum. It exists within the macro economy. The first thing I want to note is the issue of this new threat coming from the Omicron variant of the COVID. Yes, it is going to be there, but I don't see it coming from as we had in 2020. As long as government's response is not yes, as long as government response is appropriate, okay, we may not have any dislocation. But a major thing that will affect market next year will be the interest rate environment. Okay, the interest rate environment is going to be high in 2022. You can bet on it. You can bet on it. Why will it be high? It is going to be high because one, we are entering next year is penultimate election year. Okay, so we are going to see more pressure on foreign reserves. We are going to on exchange rate. We're also going to see interest rates rising because of the Petroleum Industry Act that's been implemented.
Yes.
The moment fuel subsidy is removed, inflation will go up. And if inflation goes up because fuel subsidy has been removed, you will find the central bank will change monetary policy stance. The central bank is likely going to change its monetary policy stance in March, either in March or in May. Okay, central bank will tighten monetary policy. And when that happens, if interest rates are up, if MPR is increased, for example, and yields begin to go up, okay, you will also find a preference fixed income securities. It will also move to fixed income because yields are going up. I remember too that the 2022 budget has a very huge deficit component.
Yeah, huge deficit.
Over 6 trillion. As a matter of fact, 6.2 trillion deficit. So government is going to borrow to finance that deficit. Okay, and such borrowing will also further drive up interest rates. So as long as interest rates, keep going up, as long as yields in the fixed income markets keep going up, you should also expect that the equities market will become unattractive. The other thing too has to do with the global impact. In the US and the UK, in Japan, especially the US, there is this expectation that the Federal Reserve will try to normalize interest rates. That's increase the Fed fund rate. So once interest rates that process begins, yes, bond yields also rise. So if yields are rising, that will also lead to capital flow reversal. You find more foreign investors leaving Nigeria, for US. So that would dampen the stock market as well. And if that happens too, the government of Nigeria also, has more challenges even servicing the huge debt, Eurobonds, that we have borrowed. Yeah. So the market is going to be a challenging one in 2022. Again, as I said, in response to the interest rate environment and monetary policy reaction, the huge deficits, the election year pressure, all these will impact markets in 2022. So I don't see the Nigerian stock market returning to the level of we had in 2020. The 50% return that was recorded in 2020, that won't happen in 2022 because of these factors that I've mentioned.
Yeah. Well, Prof, some very interesting developments to watch out for. I know the players in the equities market will now have to sit back and really re-strategize because amidst all the challenges, there must be a silver lining. But very nice to hear the glimpse of what to expect in 2022. Very clearly, Omicron, if government does what it has to do, it won't have any adverse effect. And of course, the interest rate environment will be one area to watch. Of course, pre-election year, the issues around, of course, the impact on the market, the bond yields, what's happening in the Fed, and that climbs. We'll keep a track on that. Thank you very much, Professor Uche Uwaleke, President of the Association of Capital Market Academics of Nigeria, for this very interesting conversation. A lot of rich insights on the Finance Bill 2021 implications on the capital market and some interesting developments to watch out as we begin to round up the year 2021 and brace up for year 2022. Thank you once again, and it's been wonderful having you through the year discussing around the financial and capital market. Thank you once again, Professor Uche Uwaleke, and Merry Christmas in advance.
Merry Christmas and happy 2022.
Yes, same to you and your family. Thank you very much for the time. Thank you. And that'll be all for this edition of the Market Review. And if you have questions or comments, suggestions around what we discussed today, which is the Finance Bill 2021 and implications for Nigerian capital markets, send them to otobasidabasecom@proceange.com. We're glad to respond to you. Also join our website, www.proceange.com, to get our latest articles, watch our videos, and get further insights of the Nigerian capital market, financial market, even the global markets, all captured for you. To come your way again, thank you for watching. Have a nice day and Merry Christmas once again in advance.